So those of you who know me, I'm Stephen Orn, better known on Wall Street as Big Beat. I don't need an introduction, but these guys literally are writing the AI world that we're living in today. So if you're not thinking about AI and your company's not part of AI, your company's pretty much dead. So without further ado, I want to let these guys introduce themselves. A lot of these guys don't even need to be introduced, but I'm going to let them introduce themselves and tell them a little bit about their company and who they are, and then we'll get right into the questions. All right, here we go.
Okay. Hi, I'm Taresh Batra. So I'm the VP of Investments at Range. Range is an all-in-one wealth management platform that's powered by AI. So it's a place where households can go get help with their investments, their tax strategy, their long-term planning and retirement, their estate strategy, all for a fraction of the price of what a traditional advisor would cost. So my background primarily is on the public market investing side. I spent 15 years in the hedge fund world, charging a lot of fees. So, 2 and 20 and very, very exorbitant fees that were becoming harder and harder to justify. Range does not charge asset management fees. It's exciting to be able to play offense and be able to democratize that investment management.
Great. We also like low fees and felt someone who spent 25 years in financial services, trading desks, investment banking, that now is the time to be part of a low fee platform. I'm Michael Arbus. I'm CEO of Moomoo Canada. Globally, Moomoo's in 7 markets. We have 27 million registered users. We're in the discount brokerage space, but more the discount brokerage space that has a super app on top of it that does many of the services except tell you exactly what to do. So a lot of the features you're going to see that we offer today for free for our users are all based on AI data integration and making it pretty easy for you, but not that easy. You have to learn together with our community to use our app in order to give you an edge amongst the other 27 million people that are using us globally.
Love Moomoo. All right.
Welcome.
Perfect. Quentin Pike with Massive, formerly Polygon.io. We provide scalable financial data platform to help power AI. We're kind of a layer below the brokerages that provide the data for those experiences.
Hello. Okay. Ray Polonsik, Senior Manager of Market Data at Robinhood. Robinhood, obviously, if you don't know who we are, then I'm not sure where you've been lately. Yeah, we obviously work with some of these guys, and AI is definitely at the forefront of where we're heading.
All right, let's get right to it. So, in the question I was asked this morning, I was on one of those Floyd New York Stock Exchange. I was asked by Fintech TV, "Are we in the AI bubble?" Right? And I said, "Yeah, probably," and we have, and we probably burst a few times, right? So, I'm going to ask you guys a serious question. Compared to the last, let's say, .com and the technological advances that we're going through now, tell us, where are we in that level? Are we growing as fast as AI that we did in the past? Was it faster? And what do you see?
I mean, what we're seeing with AI is in some ways unprecedented, right? I don't think in our lifetimes we've seen something like this, including the .com era. So this is a revolutionary technology, and we're seeing it also just in terms of like the adoption, the actual pace of revenues and profits that these companies are earning. So it's very, very different. And I think part of it is that it's not just automation and it's not just making things faster, but it's actually reasoning, right? It's actually taking and adapting. And as an investor, one of the things that you do is you take a bunch of different information sources and you create a mosaic, right? You're not just investing purely on valuation. You're not just investing purely on the latest data point. You're taking all of that together and you're interpreting it kind of in conjunction with each other, and you're creating a mosaic. Previously, only humans could really do that. Now you can actually have AI do that. So it's very, very different than anything that we've seen before, especially on the investing side.
And from a data perspective, I'm going to ask something from Quentin. How do you feel about that, Quentin? You feel the same way?
Yeah, I think the brokerages offer kind of the experience with the AI. I think you kind of see these recommendations and kind of suggestions on what to do. I think the potential problem is, how did it get to that decision? And I think that's where you kind of need the data provenance to understand where that decision came from. So I think that's going to be more and more important over time to understand why it's making those decisions.
Yeah, and I noticed that Ray, Moomoo, and Robinhood don't have boxing gloves on today. So let's keep it civil, guys. But let's talk about it from the perspective of the user. Are they feeling the same way that the excitement, the technological advances are still there?
I'll go first. On our side, we've had an AI tool that's available for all of our registered users where you can actually go in and say, tell me, I've seen some Elon Musk comments on robotics. I'm looking for US ETFs, perhaps where I can invest in Chinese listed names. And you'll be given data. You might then further that analysis that you're doing on your own to say, how can I understand if this is a good idea or a bad idea? And you'll get some thought process. What you won't get is the final decision. And what you won't get is how does that integrate within a portfolio? How does that integrate to your lifestyle and your expenditures and your wealth plan? So even though AI is available today in its infancy and it can help you filter through many of the decisions that would get you to the point of trade, it doesn't actually take you the full distance of what a wealth manager and a live person might do. But with education and community supporting the undertone of it, putting it all together gives you a real chance to make informed decisions on your own with the proper tools without oversimplifying it and insulting an investor and saying, let's give it bells and whistles and treat your money as if it's not serious. We like to think that people are smart and want to be smart, and we're giving you tools to make you smarter.
Yeah, I mean, right now for Robinhood, we have our Cortex tool. It's an AI agent, basically an AI that summarizes news, market data, internal proprietary data, and on a regular basis will give you just insight into individual stocks. So that's currently where we're at. I think the interesting thing about AI is that depending on who you are, as far as a brokerage or a vendor, you can see it as underlying base technology for what you're going to build versus tools for internal or for your clients. I think there's gonna be a lot of creativity to see kind of how this can be utilized.
So we introduced Rye, which is our AI tool, about a month ago, and it is actually specifically built to replace the human advisor, right? So it's a tool that understands your entire financial profile. It understands your assets, your liabilities, short-term investments, long-term investments. It understands your tax situation. It's not just the numbers. It also understands your goals, your aspirations, your objectives. It understands your household dynamics. It understands your spending patterns, right? So this is the reason why people have gone to financial advisors in the past, for intimate, personalized, unique advice that's tailored specifically to them. That's not cookie cutter. The difference between Rye and a traditional advisor is that it doesn't sleep. It will let you ask the same question a million times. It won't judge you for that, right? It's not checking in on your portfolio every quarter when they're time to have your regular update. It's up to date at all times. So it can do all of these things that weren't possible before AI, and it can do it for a fraction of the price of a traditional financial advisor.
And I'll jump in just to say that at Moomoo, we're in 7 regulated markets, and with our 27 million registered folks, all of them are looking to use solutions like that. But in my past, my job was to fly into New York City, meet with hedge fund managers in the early 2000s, the John Paulsons, the Steve Cohns of the world, back in the good old days when they were just accumulating their assets. So even if you had a perfect strategy built and you presented the exact same idea to the same 10 leaders of the hedge fund industry, each and every single one of them would have their own unique perspective on how to act to make money. Some might like it, some might find it as a risk neutral strategy, some of them might hate it and bet the opposite direction. So what I find really interesting about the models that we're all putting together for AI is there still is a human element of training and monitoring it. And as someone who's just gone through the regulatory gauntlet of having crypto exchanges, marketplaces approved in Canada, now doing it again with Moomoo, that consideration of who is actually the arbiter of your model and its integrity is the conversation I think they want to have. So I'm really excited that you're pushing the envelope on that.
Yeah, absolutely. I mean, look, I think financial services in some ways is actually a leg ahead than other industries, right? Automated trading.
Finally. What the hell's gone on over the last 2 decades?
These are not new concepts, right? So we've had automated trading. We've had algorithmic trading. We've had high frequency trading. I think it's a misconception that regulation is built for humans. It's not. It's built for firms, right? And firms ultimately own the actual outputs. And so we're pretty familiar with this. Regulations have evolved. The SEC is going to regulate AI, right? They're doing it very thoughtfully. They actually rescinded some proposed regulations earlier this year. We know that's going to happen. You have to lean into it. We're not going to stop technology from progressing in the same way that we haven't before. You just have to kind of build around it and make sure that you're still safeguarding things like being a fiduciary, right? The data, the ultimate AI washing, not exaggerating what you're actually capable of, and making sure that you're disclosing things the right way. So it's the same principles that are going to apply. It's just going to be done in a different way.
And let's talk about that. I'll give this to Ray. One of the things that the big bad word that everybody likes and hates is compliance. How do you at Robinhood and your guys' teams, how do you put the compliance in place, make sure the compliance is working, and and the AI sneaks into compliance and all those fun things. How do you guys do it over there?
Yeah, so our model has guardrails. It verifies truth and accuracy. We also have human components to go cherry pick and verify as well. They put a lot of thought into it, and they are constantly taking in client feedback, taking in internal feedback, and making the model better and making sure that we don't say anything patently false within the AI summaries. I think the other thing about the regulation is right now, FINRA and the SEC are much more open than they've been since I've known, on being willing to look at rules and revisit them. Like PDT is up for grabs again. That's great. Like that's before I was in the industry when that came to be. So I think we have a good chance of AI really being listened to and understood by the SEC and FINRA and really be able to get some good rules in place.
We're using AI tools to satisfy compliance's obligation where they are trying to regulate AI. We use AI to demonstrate why it's possible to regulate it. Layer 2 AI.
What about you, Quinn?
I think the important part of the compliance, I think we're building that into the kind of foundational platform. I think what we're trying to do is provide the traceability and visibility in the data for these models. So when we kind of sit below the brokerages, I think we're trying to provide that infrastructure so that when these experiences offer these recommendations, again, they have the transparency and understanding of where the data came from, when it was changed, and they can just kind of see that full provenance of the data back to where it came from.
Okay, let's get to it. We've all talked about AI, but most of us grew up with an actual broker. So one of the questions one of you guys asked was whether or not we'll see the human factor. Will people go back to actual brokers again? Will we, or have we already passed that threshold?
I'll take this one first. So I have friends that are in that industry, and their target audience, let's say, is a lot different than our target audiences collectively. I suppose there's a need for someone to pick up the phone, but when they pitch you, the story's evolved over time to say, can I send you your money on time? Can I show you your statements? Can I take you through your financial plan? And that's the extent of most relationships. As far as stock selection, diversification of your bond portfolio, most of that is done through internal bank software, which spits out output that you just relay with your voice to a person that's not in your target audience. For us, what I like to say about Moomoo is that you've got an hourglass and you can type any ticker in it. Within that ticker, you will spit out every single chart recognized pattern with green, orange, or red, with a dial that will tell you green, this looks good from a technical perspective. Then on the other side, if you scroll down a little bit further, you'll see changes in short interest, fundamental cash flow multiples relative to peers in industry, and then you'll get a rating that combined will at least allow you to think about, and then a news sweep to see if it's positive or negative sentiment, and then perhaps check the Pelosi portfolio to see if she's added to it. All of that in one.
She resigned. It's okay.
Oh yeah, that's
relax.
right. I'm sorry, I shouldn't mention it.
I forgot what the question was.
I probably took it a different.
The human element. There's why we don't use the human element now, right? I love that. Do you see over massive? Do you guys? And you guys are building all this massive data, and one of the cool thing about the data side, that a human can't handle that kind of data, right? So, but do you see a human broker being back into the mix again?
I can, my experience as an individual trader, I think the competition is not on like the fees anymore. I think around like actual trading fees, I think everyone's kind of gone to zero. So I think it's really what kind of experience can you provide? Can you provide something that's personalized, that helps me, and it might be different for me versus someone else. So I think how can you personalize it and make it really offer you the insights you need to make the decisions that are right for you. So I don't think so as an individual, but we provide data for everyone, even if they are a brokerage or a broker individually.
I think that's exactly right. I think you have to ask why they'd be going back to a human, right? I think in our experience, our members, as we call them, they don't really care if it's AI, it's a human, it's a robot. They just want it to work. They want the output to be good. Obviously, generationally, there's some people that do prefer to speak with a human and they learn better that way. I think as time goes on, that generation is going to shift, right? But I don't feel more confident that sending a message to you is going to be better handled by a courier than sending it via Gmail, right? I don't think that we move backwards as a society. When things work, they work. And so it'll really depend on whether or not the outputs and the outcomes are just as good, which we think they can be.
Yeah, you know, one of the things on this panel, you're all young and you're all building some cool stuff, right? But the one thing, we're in New York City, right? This is where the large banks are and the big firms. Are they keeping up? Are they spending all that money correctly? Are they in a situation where they just can't catch up? Is the Jamie Dimons of the world in trouble?
I think that they didn't care.
Well, you both jumped in on that one. You're like, whoa, that's good. I like that.
No,
I was gonna say,
Go, Ray. Come on, Ray.
I think that, you know, the wave started what, back in 75, 76, whenever the rule changed. The discount brokers came through and now they're the primary brokers. Schwab, Ameritrade's gone, E-Trade's part of Morgan Stanley. I think the only way forward for them would be acquisition. And with their tech debt that they have over the last 30 to 50 years, depending on the bank, I don't see them likely to really have the cachet for younger people who want the right tool sets and want to be able to make decisions on their own.
Yeah, I think it's sometimes more cultural than technological. I think there's a lot of API platforms now that can offer you that kind of leapfrog in terms of getting up to date in terms of modern platform. I think a lot of it's kind of culture around just kind of AI being a marketing ploy and less of actually embracing the technology and using what it's actually good at.
And I was going to say, the big bank mentality is to pass through to where there's higher fees, and they've ignored the discount brokerage sector for a very long time. I remember in the late 1990s, you would get a phone call from a friend saying, look at this micro cap, it trades, and you would trade through TD Ameritrade for $29, and that was 25% of what it cost in the early 90s. And you thought you're a genius. Now the pipes are better, the costs are lower, and now with AI, your access to more accurate information on a timely basis as a retail individual has gone up exponentially. So the need for a full service platform has gone down, but they've ignored us. And that's why companies like Robinhood and like Moomoo and our companies are able to compete and aggressively with a much lower budget.
Yeah, I think it's going to be hard. I think it's going to be hard for the banks. I mean, look, they always find a way to make money. I'm sure they'll find creative ways to make money, but
Acquiring
at least
you.
with wealth in particular, there's a number of challenges. I think first, someone mentioned it, their DNA is just their financial services DNA, right? It's not tech DNA. And with the pace of innovation that we're seeing, it's really hard to not be built like a tech company to be able to keep up. I think the talent that they have also is really human talent, right? And from the advisory perspective, those that are giving advice, these are people that are asset aggregators, right? They're business development people. That's what they're really good at. And in a world where the next client is not coming in on the golf course, but it's coming in purely based on outcomes, like I think there's a little bit of a talent mismatch. And I think the last thing is they're addicted to the fees, right? The advisory fees. And it's really, really difficult. These are publicly traded companies. The capital markets are not giving them carte blanche to just go invest, right? They have to continue to preserve those fees. And so that becomes a problem for them as well. So I'm sure they'll find a way to participate in some way, shape, or form, but I think the growth is really going to be taken by the technology companies.
And we've talked about all the good things that AI is doing, but let's talk about one thing that we haven't talked about, and that's the challenges of the next level of stuff that we're building. What challenges are you guys seeing in your builds of the next level of your AI and your brokerage platform?
I will say accountability from a regulatory standpoint. You can make beautiful product. You can have a beautiful model. You can train it. There can be slippage. There can be output that you can't track when you've scaled. And to then have, in some markets, there's a role called the ultimate designated person. That person, the buck stops with them. If you say, I've got 500,000 clients that have been receiving AI advisory and 20,000 of them, it's a small percentage, don't worry about it, have received bad advice that they acted on, you are still accountable. So the biggest fear for me would be, as an ultimate designated person, model slippage and accountability, and the regulatory framework pointing the finger at a human.
Terrence, what are you guys doing?
I think it's the same thing. I think from a compliance standpoint, right, the rules are not written, and so you have to stay incredibly proactive. I mean,
Is that the challenge, that you don't think that Congress and the White House can't even get together a budget, is having problems now with SEC?
I mean, look, in some ways right now, there is a bias towards innovation from the administration, and so we'd rather take that, right, than kind of going overhanded with regulation. But you have to anticipate. So we're a relatively young company, but we brought the compliance function in-house early. We're still working with outsourced legal on every component of AI. We have a supervisory tool that we've invested in early. And again, we're adhering to the principles. We're actually regulated by the SEC under an RIA and the fiduciary principle, when in my perspective, that's actually more stringent than a lot of the broker-dealer principles. So it's kind of just anticipating, and to your point, it is doing it at scale, right? That's a problem with AI. There's a natural limit to how many customers a traditional advisor can actually service, right? And so you can only really harm so many people, right? Because you can handle what, 100 households, 200 households. When you're handling millions of households, right, then it just becomes that much more important to get it right.
Yeah, that's a good point. I mean, Ray, with your side, you've got a lot of users, right? And I think it was interesting, like over the weekend, I saw a tweet from Robinhood saying, what do you guys want next? That's a challenge, right? When you don't know what they want sometimes and you have to ask them. Is that right?
A challenge or an opportunity. I mean, we're data driven. We do ask clients all the time what they want from us. So it's pretty easy for us to kind of queue up what our years look like for projects. For AI, I think the biggest challenge for me being on market data is you need a lot of data sources for new AI tools, and dealing with those data vendors can be challenging in the least and impossible sometimes. And so it's, yeah, I mean, there's plenty of room to run. I know we'd introduced some AI scripting at our last summit that we did here. So that'll be coming up here next year, I think. And yeah, just kind of move forward from there. Obviously the, range is, going the full direction, right? Of like, what can they do?
And Quentin, for you, I mean, you're a data. I've known you a long time, and the Polygon now with Massive, I love it. But you've seen, and I have seen since 1989, a lot of data changes, right? And that's a big challenge. So how do you keep up with that challenge of new types of data? New futures are coming out. You were talking about that earlier. Zero DTEs, obviously, I hate them. But what are the challenges for you?
I think there's a lot of challenging around licensing. I think, when you look at the kind of licensing around the SIPPs, just equities, they don't really understand what an API is yet. And so trying to understand AI at this point, I think is kind of unfathomable. I think, if you use a data point into a model, is that a derivative? Is that derived data? Or is that still kind of, individual use case? I think just a lot of the licensing, problems manifest themselves in kind of dealing with these data vendors. So I think, trying to get them to play catch up and understand what is AI, how does it work, is that actual a derived price or not, I think is going to be really important to helping the kind of innovation spread it more widely.
I know we have a huge number of people here today. Is there anybody out there has a question to ask them? Get ready for a question if you want to ask a question. There it is already, David. How are you, man? What's your question, brother?
Hi, everybody. My name is David Afariat. First of all, I want to congratulate all of you for not putting all your hard-earned resources and money into Super Bowl ads like the existing brokerages that are out there. But tell me a little bit along the lines of, in the next 12 months to 24 months, where do you see the most capital investment in your companies going towards to grow?
We're building out at Moomoo. We have an ecosystem now that's large enough and scaled in equities, where we're using an extremely modern tech stack with over 3,500 people focused on R&D, research, and product. Every decision we make is extremely data-driven, and that piece took over 10 years for it to build. We're NASDAQ listed, American-based, full service, full stack. Our evolution now is into some of the other products that maybe have existed for under 10 years. So like crypto, we're obtaining licenses in every single market and figuring out ways to use our existing equities, modern infrastructure to apply it. So that way, from a user perspective, you log in, you're seeing everything all in one spot, and you can seamlessly move between your cash account, your margin account, your crypto account, perhaps your event contract account. And there's some other things. If you think about what a fintech company truly is, you're on and off ramps for fiat from conventional. You're on and off ramp for crypto coming in. Once you've got capital stabilized in your license, you're just routing capital to execute things on various marketplaces that themselves are hopefully licensed and bring it back. And you're a ledger technology. You're a regulated ledger technology that's trying to provide security for your users. And then you're a marketing funnel trying to acquire users.
Yeah, our biggest piece of investment is just in automation. right? So a traditional financial advisor spends time doing three things: building plans, answering questions, and meeting with members. The first two of those things we're highly confident can be automated. Honestly, a lot of that can be done with software and heuristics. When you add AI on top of it, you can get that nuance, you can get that personalization that really otherwise required a human. So we're just kind of going down our roadmap of automation first and foremost.
Yeah, I can't really say what the next 12 months is going to look like. I know, yeah, for me, it's just more data and making sure that we work with our vendors, everything's compliant, and everything runs smoothly.
Yeah, I think acquiring as much data as possible. I think that's really key, and making it accessible in a way that language models can access it, not just in a single a single path. Being able to query it, ask it questions, and help the models kind of make the decisions. So I think you have trillions of rows of data, but that's great. But if you can't understand it, you can't query it and kind of reduce that down and aggregate it, then the models can't really handle that much data. So I think just how do we amass as much as possible, then make it accessible to language models in a very frictionless, intuitive way.
All right, about 2 minutes. I want to ask one question. Each, let's say, generation comes up as different, right? They have a different want or different need. Obviously zero DTEs or gambling or whatever. Now, what is the next step in evolution? What are they looking for next that they want that you have not produced yet?
I'll start. I mean, what we see is they want the technology to do it for them. So it's one thing to get advice, but they just want to be able to say a command and have it be done. So there's small things in terms of just.
But doesn't everybody want that?
That's true. I mean, I guess, we all did, but maybe we were not brave enough to ask and demand in the way that the new generation actually is. But it's small things like, hey, on my profile, right? I don't want to actually go in and change X, Y, or Z. I don't want to have to change the fact that I'm earning more, I got a bonus. I just want you to do it. So do that. And then kind of going into more complicated things like they want us to be able to buy stocks for them. We're not doing that, of course. They want us to be able to just file taxes with a command. But that is, I think, where the demand is going.
I think if you look at the impact of AI on job markets long term, and you say that one of the main problems for us to solve as a society is purpose, giving people a tool set that gives them something to do with their time to manage what little resources they have left before the era of universal basic income comes in, I think is where we're headed. So great products, great data sources through a large data group that we have, building products that people can use to fill the void, not just making it oversimplified for them like some other platforms going that direction. We like empowering our users to learn and grow with us.
My answer is a little bit different because we're at the data level, but I think, keep asking why did that price change? Why did that happen? Kind of keep diving down to get down to the nanosecond timestamp trade transaction of like what actually happened to cause this event. So I think just having that data available to keep asking why and keep digging deeper into these events that are happening.
Come on, Ray. What's next at Robinhood? Everybody wants to know. Come on.
Yeah, I can't really say what's next. I think ultimately, like was said earlier, personalization at scale with AI is definitely, coming down the pike. And as it comes, it'll be, like you said, frictionless, of being able to have things just work without you having to push for them. I think makes sense. And just a better tool set of simple questions, be able to give you a thorough answer not like you're, not oversimplify, but, educated answers that can be insightful. And yeah, I think the AI in general is going that direction, right? Of like, you can offer that personalization, scale, and insights that a broker would not be able to answer.
All right, we'll come to our time. Give it up. These are the guys actually building our future for FinTech. I mean, my God. Yeah, thank you.